You know, in crypto, it's really easy to get caught up in the day-to-day price charts. But the real story, sometimes it's happening just below the surface, with the giants, the whales. And today, we're hunting one down. So this whole thing kicks off with one huge transaction. I mean, the kind that just lights up the blockchain explorers. On November 29th, 2025, this one wallet starts getting this massive inflow. And the data, it's all pointing to a huge withdrawal from a major exchange. And we're talking about Ethereum here. The amount? Get this. 16,693 ETH. I mean, if you're an on-chain detective, a number like that is like a giant flashing red light. You know something big is going down. Okay, so what does that even mean in regular money? We're talking over $50 million in one shot. This isn't some day trader messing around. No way. This is a statement. This is someone with seriously deep pockets making a move. So, of course, the big question is, who? Who is dropping 50 million bucks on ETH like it's nothing? And is this just a one-off, or is it, just the tip of the iceberg? Well, that's exactly what we're going to dig into. All right, so it turns out that $50 million shopping trip? Yeah, that wasn't a one-time thing at all. It was just the latest purchase from a new, absolutely dominant force that's been quietly, or not so quietly, stacking Ethereum like you wouldn't believe. And just in case you're new here, when we say whale, we're talking about someone, an individual, a company, who holds so much crypto that when they move, the whole market feels it. And the player we're about to meet, they're not just a whale. They're basically the new Moby Dick of Ethereum. Okay, the name you need to know is BitMine Immersion Technologies. And the easiest way to wrap your head around what they're doing, think of them as the MicroStrategy, but for Ethereum. You know how Michael Saylor and MicroStrategy just went all in, making Bitcoin their main treasury asset? Well, BitMine is doing the exact same thing with ETH. But honestly, they might be even more aggressive. And the guy steering this ship? It's Chairman Tom Lee. Yep, the same Tom Lee from Fundstrat, who's been famously bullish on crypto for years. His entire playbook, this entire massive accumulation, it all boils down to one simple belief. He says, the cycle hasn't topped. He's not just nibbling here. He's placing a multi-billion-dollar wager that this thing has a lot further to go. So just how big is this bet we're talking about? Let's actually look at the timeline of how they've been buying, because when you see it laid out, it's absolutely breathtaking. This is a calculated, full-on assault. This is the part that gets me. On June 30th of 2025, BitMine had zero ETH. Fast forward less than a month, they're sitting on over 500,000. By the end of September, 2.6 million. And by the end of November, they've stacked up over 3.6 million ETH. They went from zero to an empire in under 6 months. Just wow. Okay, that 6-month view is crazy. But let's zoom in even closer. Let's just look at 1 week, the last week of November. Look at these numbers. They're dropping tens of millions of dollars pretty much every single day. And check out November 24th. Over $82 million in 24 hours. This isn't just buying the dip. This is a strategy to hoover up every last bit of available supply while prices are down. So, after all that relentless buying, where does that leave them? Well, their total stash now adds up to one very, very significant number, 3.05%. And let's be clear, that's not 3% of some random altcoin. That's 3.05% of the entire circulating supply of Ethereum, a single company. That's a massive chunk of the whole network's liquid supply now locked up in one place. And believe me, that has huge implications for everyone else in the market. So the question is, why? Why do all this? Well, it all boils down to a classic economic play, just updated for the crypto world. They are intentionally creating what's called a supply shock. So what's a supply shock? It's pretty simple, really. It's when the amount of something available to buy suddenly dries up, but people still want to buy it. In crypto, that happens when a giant like BitMine buys up tons of ETH and moves it off the exchanges into long-term storage. The less ETH there is for sale, well, you know what happens to the price when demand kicks in. And you can see this happening right now, in real time. The amount of ETH sitting on exchanges ready to be sold, it's hitting multi-year lows. At the exact same time, the amount of ETH in whale wallets is hitting all-time highs. You see the pattern? The pool of available ETH for the rest of us is just shrinking day by day. And this right here, it really shows you the different mindset between big money and everyone else. I saw a great piece of analysis that put it perfectly. When the market dips, a lot of retail investors see a fire alarm. They panic and sell. But the whales? They see a fire sale. It's a massive discount, a golden opportunity to buy even more. Okay, so let's zoom out. Why does any of this matter? What are the big takeaways from watching this giant whale in action, especially if you're just a regular investor? All right, let's break it down real quick. Point one company now owns over 3% of all Ether. Two, they've publicly said they're going for 5%. Three, this is creating a huge supply squeeze on the market. Four, they're not the only ones doing this. And five, and this is key, they're using the fear in the market as their chance to buy cheap. And BitMine isn't being shy about their game plan. They've laid it all out. Step 1, keep buying the dips. Step 2, get to 6 million ETH, which is that 5% supply target. Step 3, just wait. Let the cycle play out. And the end game? Their price target is somewhere between $7,000 and $10,000 per ETH. That's their bet. Which really leaves us with one last kind of chilling question, doesn't it? This whole strategy works because big money is feeding on the fear of smaller investors. So if retail fear is the fuel for the smart money rocket ship, you have to wonder, just how high is that rocket going to go?
Okay, so let's just jump right into this. While everyone is busy staring at the daily price charts, something absolutely huge is happening right under our noses. We're talking about one of the biggest, quietest accumulations in the history of crypto. And get this, it's not us, it's not retail, it's Wall Street. And they are buying up Ethereum by the billion.
And I want to be super clear, this isn't just some catchy phrase or a bit of wild speculation. No, this is a massive, documented financial shift that's happening in plain sight, right on public stock exchanges. And it really points to a fundamental change in how the biggest players in finance are thinking about Ethereum. So yeah, you heard that right. The institutional whales are here. They've finally arrived in the Ethereum ecosystem. And they're not just, dipping their toes in the water. They are making enormous strategic buys. And the data? Well, the data is just undeniable. And this data shows just sheer raw acceleration. I mean, take one of these special vehicles they're using. We'll call it proxy stock SBEAT for our example. We're talking about a 245% jump in the number of institutions owning it in a single quarter. This is not gradual interest, my friends. This is a stampede. And hey, if you thought that was fast, you gotta check out this other one we'll call BMNR. This company watched its institutional ownership literally quintuple. Yeah, from just 6% to over 31% in less than 2 weeks. That's the kind of insane speed you only see when big, serious money decides it's time to make a move. Okay, so you're probably asking the big question. How on earth are they pulling this off so fast and at such a crazy scale? Well, it turns out they're not just winging it. They have a very specific and honestly, a very clever playbook. It's the most logical question, right? I mean, if you're a multi-billion-dollar fund and you want to get into Ethereum, why not just go on an exchange and buy it? Well, you see, for these massive institutions, it's just not that simple. They've got a whole different set of needs and, more importantly, a whole lot of rules to follow. And this is exactly why they're taking a different route. They're using what we're calling proxy stocks. For them, this is the perfect solution. These are fully regulated, publicly traded companies that you can buy and sell just like any other stock. So that eliminates the massive headache of crypto custody. Plus, you get the staking yield, and you operate with zero leverage risk. It's the perfect, tailor-made on-ramp for institutions. So let's just nail down exactly what these things are. An ETH proxy stock is basically Wall Street's weapon of choice. It's a NASDAQ or NYSE-listed company, and its entire business model is to buy Ethereum, stake it, and generate a yield. It effectively turns itself into a giant ETH treasury that any fund manager on the planet can buy a piece of. Now, this whole trend is really being driven by two main types of players. They're taking slightly different paths, but they're all headed to the same goal: accumulating a massive amount of Ethereum. So let's look at our two examples, SBET and BMNR, to really understand what's going on. You can kind of think of them like this. The $SBET type is what you might call the purist's play. It might be backed by someone like an Ethereum co-founder, and it's just laser-focused on one thing: acquiring ETH and compounding that sweet staking yield. The $BMNR type, on the other hand, is a momentum machine. It's built for speed, for incredibly rapid accumulation, and for attracting a ton of market velocity. But when you look at the raw numbers, man, the scale is just staggering. Now, both of these are impressive, but just look at the sheer size of the BMNR type. It holds 3.63 million ETH. That's 3% of the entire supply. And look at that institutional rush. Over 360 new owners, a jump of over 2,600% in a single quarter. It's wild. Their annualized yield is already getting close to $500 million. This visualization just hammers the point home. It really puts that difference in scale into perspective. We're not talking about a small gap here. The BMR type's treasury of Ethereum absolutely dwarfs its competitor. This model represents the single biggest corporate whale in the entire crypto ecosystem. Full stop. So who exactly are these institutions that are piling in? Well, we're talking about the absolute biggest names on Wall Street: BlackRock, ARK Invest, Schwab, JP Morgan, Pantera Capital. I mean, these aren't some niche crypto funds. These are the pillars of the traditional financial world, and they are all placing massive long-term bets right here. So what does this all mean for the bigger picture? Why should you care? Well, this isn't just some fascinating stock market story. The sheer scale of this accumulation has really profound implications for the entire Ethereum network. It could actually be the trigger for a whole new kind of supercycle.
It creates this thing you could call an institutional flywheel. The logic is so simple, but it's incredibly powerful. Here's how it works. Institutions buy the stock. The companies use that money to buy and stake more ETH. That staking generates revenue, which they then use to buy even more ETH. And what's the result? Liquid supply gets squeezed right off the open market. It's a beautiful self-reinforcing loop.
And the effect is already huge. As of right now, corporate treasuries, just like our SBT and BMR examples, hold 5% of Ethereum's total supply. And remember, that BMNR model alone accounts for 3% of all ETH in existence. This is a massive supply shock happening right under our noses. And let's be absolutely clear about something. This is not a short-term trade. The world's largest funds aren't trying to flip ETH for a quick profit. They are embedding it deep into their balance sheets as a long-term, yield-generating treasury asset. This is a fundamental, multi-decade bet on the future.
So why are they making this massive bet? It's because they see the underlying trajectory of the technology. They are not distracted by the daily price swings. They're focused on Ethereum's fundamentals, its scaling roadmap, its role in tokenizing real-world assets, and its powerful economic engine driven by staking. That's the real story here.
Which, of course, brings us to the final and, let's be honest, pretty provocative question. When you have these institutional whales systematically buying and locking up a huge percentage of the total supply for the long term, does a price target of, say, $15,000 for Ethereum stop being a meme and start looking more like a mathematical inevitability? Definitely something to think about.